Ladies and gentlemen, good day and welcome to the KARNATAKABANK Q2FY23 Earnings Call hosted by KARNATAKABANK. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. On behalf of KARNATAKABANK, today's call is attended by Mr. Mahabaleshwara NS, Managing Director and Chief Executive Officer, Mr. Balachandra YV, Chief Operating Officer, and Mr. Muralidhar Krishna Rao, Chief Financial Officer. I now hand the conference over to Mr. Mahabaleshwara, MD and CEO, to give his opening remarks before the Q&A session. Thank you and over to you, sir.
Good evening to all the boarders. Welcome to the con call of KARNATAKABANK on its Q2FY23 results. I am Mahabaleshwara MS, MD and CEO of the bank, accompanied by my COO, Mr. Balachandra YV, Mr. Muralidhar Krishna Rao, CFO, and Mr. Abhishek Bagchi, CFO designate. Apart from disseminating the Q2FY23 results through the exchanges where the stock is listed, we have also sent communication to the shareholders whose email ID is registered with our RTA, and also uploaded the investor presentation in our website after sharing the same with both the exchanges. I am sure you are all well aware of these official communications. Friends, it is well within your knowledge that the QOQ net profit of KARNATAKABANK went up by 227.70% to rupees 411.63 crores from rupees 125.61 crores. This is an all-time high quarterly net profit for our bank. Similarly, the half-yearly net profit of rupees 525.81 crores is also a new record. In this process, in just 6 months of the current year, we have already surpassed the last year's total annual net profit of rupees 507.99 crores. As far as the operating profit is concerned, it showed an YOY growth of 17.06%, interest income a healthy growth of 13.95%, yield on advances further improved to 9.45%. And on account of all this, the NII, net interest income, also jumped by 26%. Overall expenditure is also well contained as the same is at 8.81% YOY. As far as the margins are concerned, NIM has further improved to 3.78% for the Q2 quarter, and thus for the H1 FY23, it is now at 3.56% as against 3.15% an year ago, thus recording 41 bps increase. ROA also improved to 1.70% for the Q2 quarter, and thus for the H1 FY23, it is now at 1.10% as against 0.53% as of September 21. Similarly, ROE also jumped to 22.31% for the Q2 quarter, and thus for the H1 FY23, it is at 14.36% as against 6.89% an year ago. Thus, NIM, ROA and ROE have shown positive traction. As far as asset quality is concerned, the NPAs have further moderated consistently. The GNPA has come down both in percentage and in absolute numbers. It is now at 3.36% as against 4.03% as on June 22 and 4.52% a year ago. The NNPA has also come down both in percentage and also in absolute numbers. It is now at 1.72% as against 2.16% as on June 22 and 2.85% as on September 21. The slippage ratio for the quarter is 0.53% as against 0.89% a year ago. Credit cost is minus 0.01% for the quarter as against 0.24% a year ago. PCR has also improved significantly to 79.97% as against 71.67% a year ago. CRAR is now at 15.28% as against 14.48% as on September 21, both excluding the current year's profit. CASA has grown at a rate of 12.78% and now the CASA constitutes 32.82% of the total deposits as against 30.88% as on September 21. The advances also grew by 10.18% YOY. The overall digital transaction is now at 93.17%. As far as the digital underwriting of the loans are concerned, KBL Express Cash Loans 100% is being sanctioned under the digital channel. KBL Express Car Loans 79% of daily sanctions are happening under this channel. KBL Express Home Loans 76% and KBL MSME Loans 75%. Further, about 59% of SB accounts are now being opened through KBL Express SB accounts platform. Going forward, we will continue to focus on consistency by minimizing the negative surprises. Thus, we will focus more on further strengthening the fundamentals of the bank. As far as business is concerned, our priority areas would continue to be credit augmentation. As I said, we will be targeting for about 15% growth in the credit portfolio. Credit monitoring would further continue, and CASA and RTD, retail term deposits, would also continue to engage our attention because our intention is to take the CASA to a level of minimum 35% by March 23, and all our transformation initiatives under KBL Vikas, that is KBL Next, that would be fast-tracked. You all know that we have already started our Analytical Center of Excellence at Bengaluru very recently. We had already started our Digital Center of Excellence about 3 years back during our transformation journey. So, in future, majority of our decisions are driven by data, which would help us in scaling as well as taking fast decisions driven by the analytics. Thus, I am optimistic of the future as well as its sustainability. With these few opening remarks, now the forum is open for discussion. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anurag Jain from Green Lantern Capital. Please go ahead. Anurag, your line is is unmuted. Please go ahead.
Okay. Can you hear me? Am I audible?
Yes, sir. You're audible. Please go ahead.
Thanks for the opportunity and congrats on great set numbers. I had a couple of questions. So essentially, wanted to understand that our cost of deposits is actually down on a YOY basis and flat sequentially, while at the same time yield on advances and yield on investments has jumped substantially. So wanted to understand the reason for the same and how sustainable are the margins going forward. That's my first question.
Your second question?
Second question was, wanted to know from you if there are any, recoveries, interest recoveries in NII, if there is. And last, from my side was the SMA 1 has jumped substantially, sequentially. So wanted to understand what is driving that and would it eventually fall through into the NPAs as well. So these are my questions, if you can address that.
Okay. So you have totally 3 sets of questions, not 2. Okay. Another, as far as the first question is concerned, I think it is on the cost of deposit as well as the yield on advances and the investment. So cost of deposit for this particular quarter, it stood at 4.46, whereas the last corresponding year it was at 4.64. And for the half year it is at 4.47. And last year it was at 4.73. I think this is the best cost of deposit that we could think of. Going forward, it is already started moving towards northwards. But only thing is the increase in the interest rate that we are offering to the retail term depositors, it all gets started accumulated during the current quarter and the fourth quarter, and I think the full effect of this would be visible during the next year. So we may not be able to enjoy this type of cost of deposit going forward, that we have already factored in, but we have also taken note of to what extent it is going to increase and also to what extent our yield on advances would increase, because in the yield on advances, since around 56% of our these advances are linked to the external ratings and other things, the transmission is quick. So all in all, what I am aiming is, as of now, even though cost of deposit increase is quite visible, so also the yield on advances, but our focus would be to maintain a healthy interest spread. For this quarter, we had recorded about 4.99% interest spread, for the as against 4.27% about a year back. But I am sure that going forward, we should be able to, even during the next year also, we should be able to have a healthy interest spread of more than 4%. Then interest recoveries in NII, I think you are referring to one of the major accounts which we had treated as NPA, even though that as of June, even though that account was recovered by 4th of July, and on account of that account there is about 40 crores interest reversal during this quarter. And SMA account, yes, your question was not on SMA 2 but on SMA 1. As far as SMA 2 is concerned, so last year I had an SMA 2 portfolio of 1,240.36 crores. Now it is brought down to 795.82 crores. But SMA 1 compared to the last year, it has gone up. But all efforts are being made to further reduce that, and I am very optimistic that it will not have any negative surprises as far as SMA 1 is concerned. So this is in a nutshell for the as far as the asset quality is concerned.
Next. Perfect. That's all from my side. Thanks so much.
Thank you. We'll move on to the next question. That is on the line of Atmiya Borisha from NVS Brokerage. Please go ahead.
Hello.
Please go ahead.
This is Nalin Shah from MVS Brokerage instead of Atmiya. I am a director of the company. At the outset, I would like to congratulate the management of Karnataka Bank for a really, I would say, super performance for Q2.
Thank you.
I have a very small question, sir, that whatever you have narrated, based on that we would like to know that whether, for this kind of performance which you have done, can we take this as a, base or similarity for the purpose of Q3 and Q4 second half of the year also, and this thing expect the similar kind of a performance. Net, your NII, that is net interest margin, remaining at the current level, plus your, NPA written-off were very, I think, meager, or there was a rather, the credit entry. So can we expect both of this, to remain at the similar kind of performance?
Yeah. See, as far as NIM is concerned, for this particular quarter, it is at 3.78. I subscribe to the view that it could be sustained at that level. But our effort, in the past also you might have heard me, our effort was to take it to a level of minimum 3% that we have achieved. Now I think that it would stabilize somewhere around 3.4 to 3.5. If it stabilizes above 3.5, definitely we are also elated as that of you. As far as NII is concerned, so for the current YOY, it is at 26%. For that 40 crores, one reversal of interest, there will be further advances also happening during the current year as well as the current quarter as well as the subsequent quarter. So our endeavor should be to have a comfortable NII, though not at 26%, because I have to be realistic.
Correct.
As far as ROA and ROEs is concerned, my aim all along was to take the ROA to a level of 1% and above. That goal has achieved. So definitely we will try to sustain it. And ROE also, in fact, last conference call I said that by March 24, we may be able to achieve 14% plus. Having achieved 14.36%, our endeavor again there would be to sustain that. So definitely, as I said in my opening remarks, now almost we have come out of all the negative surprises, and consistency, we are on the consistency track, and definitely I am confident that we should be able to give a sustainable performance going forward.
Excellent, sir. Once again, I would like to offer congratulations for a wonderful teamwork which has come.
Thank you.
Thank you. The next question is on the line of Rahul Kumar from TCS. Please go ahead.
Yes, am I audible?
Yes, sir. Please go ahead.
Yes, my name is Rajesh Shishom. So, I have a couple of questions. Sir, first of all, in your opening remarks, I don't know, I just want to confirm it from you. Did you say that you are targeting a 15% growth in advances in FY23?
50% plus.
15% plus. Okay. Second question is again related to that same, the growth in advances, that I see that you have grown your loan book at approximately 2% quarter on quarter. Whereas when the other banks have come out with their numbers, except for one or two banks, most have grew their loan book at 4.5% to 5% quarter on quarter. So, do you feel that there is a pressure on, let's say there is a pressure on the bank when it comes to market share? I mean, can you just give some color on this whole thing?
Yeah. It is very relevant. I really appreciate this type of questions. See, there is no question of market pressure for the simple reason I have about 6,000 crores plus sanctioned limits which are yet to be dispersed. So our borrowers are also watching for the overall economy and its movement and all, especially in the manufacturing and the trade sectors. So that is why they have slightly delayed availing this. So our field level information is that this releasing activity apart from the sanctioning activity, would pick up during the third and the fourth quarter, and preferably during this next 2 to 3 months. That is why I am still holding on to that 15% plus credit score. It is more out of the field level condition. If at all any such variations are there, I think I should be able to come out with those numbers when I interact with you during the Q3 result con call.
Okay, thank you so much, sir. Just one final question, sir, now on the deposit side. Because for the last couple of months, we have been seeing that the entire banking system has been having some difficulty gathering deposits. So the loan book rate, the growth of loans can be affected because the deposit rates are going at the same pace. So here also I see that, what is Karnataka Bank doing to increase the deposit base? If you can again just give me some color to this. This is my final question.
See, I am continuously focused on increasing the CASA. And I have already constituted a separate CASA vertical. In all my 14 regions across India, we have CASA regional sales executives and the CASA marketing officers. As a result, you have seen that CASA is consistently growing. It is now at 32.82% of the total deposits, whereas it was at 30.88% about a year ago. And the CASA has grown at a rate of 12.78%. And whereas the overall deposit, it has grown at a rate of 6.13% only. Now, going forward, definitely there is competition which is hotting up for RTD. But definitely our focus would continue to be CASA, and RTD also we will not lag behind, because we are in an effective and competent stage, a competitive stage, wherein we are in a position to give a good returns to our customers also. And as I said, keeping an eye on the yield on advances, my spread, I will be pricing the retail term deposits cost also. And the other thing is, apart from the mobilizing the resources from the deposits, we have other sources like refinance and all, which was not effectively tapped during the previous seasons and the years, and we are now focusing on that also.
Okay, that's very helpful. Just one last thing, sir, is if we look at the large private sector banks, their CASA is in the range of 44, 45. I know you can't give guidance that far ahead, but do you think after the transformation of Karnataka Bank, can we see that kind of CASA? Can we presume to have that kind of a CASA going forward, in probably 3 to 5 years time?
That is our transformation aspiration. That is to take it to that level. Because when we started our transformation journey, it was just at 25-26%, and now we are at 32%. And for the current years, my guidance is 35% plus. We are now focusing on 3 areas as far as the CASA is concerned. Definitely one from the general public, and the second one is from those institutions. There are good number of educational institutions, there are good number of mid-corporates, there are good number of corporates, where I can get both CA as well as SA of their employees and other things. Third one is I am also focusing more on government business. Recently, our bank is also empaneled by the regulator for the government agency business, and we are making lot of inroads in that area, and that is where this confidence is stemming, so that we could reach a level of minimum 35% by March 23, and thereafter, of course, going forward, could be 38 or 40% in a couple of years.
Wow, sir, that's amazing. I got all my questions answered, and finally, congratulations on a great set. So thank you so much, sir. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good evening, sir, and thank you for taking my questions. First of all, congratulations on a very strong set of results. Sir, first question on just to clarify on the NIM part. So we are at around 3.78 and we expect around 10% lower to be the normalized sort of a NIM going forward between 3.4-3.5%.
Yeah.
Did I hear it correct?
Correct.
Okay. And secondly, sir, on the cost to income, so we did not even after such a strong profitability, we were not able to sort of come down on that. So how do we see all the OPEX shaping up for us when we see around 15% sort of a growth on the loan book?
Yeah, see, as far as cost to income ratio is concerned, we are heavily banking on our subsidiary, that is KBL Services Limited. My cost to income ratio as of March 22 was 52.57, and now for the half year ended it is at 47.40. I have given a guidance in the past that it could be somewhere around 45 to 50%, and for another one or couple of years it could be there at that range. And going forward, we are optimistic that it will further improve. And one factor which has slightly affected during this year, there is a superannuation benefit of around superannuation benefit cost of around 50.80 crores for this particular quarter, as against 23.09 crores for the last corresponding year quarter. So that is also one thing. Otherwise, the cost to income ratio, I presume that it is behaving as per our original planning.
Understood. And finally, on the cost of deposits, so you mentioned that currently the cost of deposits is around 4.46. Surprisingly, it was even lower than what was there 1 year back. So if you can throw some color on that, and going forward, what is the incremental sort of the cost of deposits that you are incurring, especially given the fact that if you have a 15% growth target, then you will need to ramp up quite quickly on the deposit.
Cost of deposit is bound to increase. No question about it. But at what rate it is increasing? Our expectation and calculation conclusion is that for the current year it may not show significant increase, and for the next year, yes, it is going to have an impact. And as I have already mentioned, this 4.46 is the lowest. My lowest as of below that. So this is, as of now, this is the lowest. In fact, as of March 22, our cost of deposit was 4.66. That means 4.64 as of September 21, 4.66 as of March 22. Now it is at 4.46. So going forward, as I said, this is already factored in, and we will be focusing more on maintaining a healthy spread.
So this NIM guidance of 3.4, 3.5, does that hold true for next year also, or will we see a further impact?
For the current year, I am on that. Next year, let us see. Anyhow, we are meeting during the next quarter and all, and we will definitely share that. But I think once we reach that, we will definitely be able to sustain that, as you have seen the PCR. PCR also, I think in my last many con calls, I have been telling that I want to have it at 70%, 75%, now 80% and all. So no question of letting it down.
Understood, sir. Thank you and all the best.
Thank you. The next question is from the line of Amit Mishra from Indus Equity Advisors. Please go ahead.
Good afternoon, sir. So thanks for the opportunity and congratulations on really good set of numbers, sir. So my first question is on recoveries. Sir, account for which we have reversed 40 crores, what was the recovery amount for that?
1 minute. My CFO will answer that. So the total outstanding balance on that account of 348 crores.
Okay.
And entire 348 crores has been recovered without sacrifice.
Okay. Understood.
There, the balance 348 crores, that was comprising of 40 crores interest and 308 crores principal. So that entire amount is yours. Recovered.
Okay, sir. Understood. And the second question is, sir, what are our strategies on branch expansions, and what are our digital spends likely to be in FY23, since we are opening digital banking units, and how many more such units are we planning to open, and what is the response of such units?
Yes, very good question, Amit. I am really appreciative of you. Future is in digital mode. So that is why in our second phase of transformation journey, we have already aimed to emerge as the digital bank of future when we start our second century saga. Next year is our centenary year. So we have already started preparing ourselves for the centenary year, and all these preparations started when we embarked upon our transformation journey. It was mainly with an intention to have strong numbers, strong fundamentals, and also to have an healthy underwriting practices, and also to have a healthy credit portfolio as well as the liability portfolio. So this being the case, so we will continue to have few brick and mortar branches, but our effort will be to have more and more digital touch points across India. DBU is one such initiative wherein very recently the Honorable Prime Minister of India has inaugurated 75 DBUs across India from all the banks. So in that 75 DBUs, there are 2 DBUs from Karnataka Bank also. Apart from that, we already have a Digi branch, Digi centers, and quite a number of e-lobbies and all such things. So going forward, the physical branches, that is the brick and mortar branches, that would act as one of the channels or one of the touch points for the customers. So we may not aim big for opening new branches, but definitely we are aiming big for more number of digital touch points.
Okay, understood, sir. Sir, my next question is on cross-selling. Are we doing cross-selling, and which products are we doing?
Lot of effort is going on in my bank as far as cross-selling is concerned. In fact, we have started an initiative called Each One, Sell One Every Day. So I have 8,500 team members across India. So they have taken up this responsibility of each one selling one each and every day. So I have given them apart from the asset and the liabilities products, there are about other 19 revenue generating products as well. To quote one simple example, it could be FASTag, it could be co-branded credit card, all such things. So they have been amply trained about the product knowledge as well as the sales skills. So our team is out there, and I am optimistic that both the cross-selling as well as upselling will continue to be the hallmark of Karnataka Bank hereafter.
Okay. Sir, one last question on data keeping. So can you give me the absolute number of CA and SA? Breakup of CA, sir?
Yeah. My total CASA is 26,790.39 crores. Of that, SA is 22,127.97 crores, and CA is at 4,338.68 crores. And balance is overdue deposits, that is just 323.74 crores.
Okay, understood, sir. Thank you so much, sir, and congratulations once again.
Thank you.
Thank you. The next question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, sir. Congratulations on a great set of numbers.
I just wanted to ask the profit that we are focusing right now on sustainability. But so what do we see as our credit cost going forward? What would be a proper sustainable number?
Yeah, credit cost, as I said, during this quarter for the first time it is at negative. Last year for the full year it was 1.04 and for the current half year it is at 0.67. So definitely it may not go up, but let us be conservative in projecting the credit cost at less than 1%.
Oh, okay, that's great to hear, sir. And so we're talking about sustainability. So our pre-provision profits that would also sustain at this level. Could we, because we are planning a 15% growth in loan book, so what kind of growth could we see in our pre-provision profits?
As far as the profit is concerned, I don't think, as far as operating profit, yes, definitely it is sustainable. And since our provision pressure, everything has significantly come down, so naturally it should help us in having an optimistic number in that front.
Okay, thank you so much, sir. That answers my question, and all the best. So looking forward to the next call, sir. Thank you.
Thank you. The next question is from the line of Manish Dhariwal from Fiducia Capital Advisors Private Limited. Please go ahead.
Yeah, thank you very much for this opportunity and the stupendous results that have come out. Fantastic. It was a great performance. So I just basically wanted to understand the quarter-on-quarter differential that has happened. So there were two components which I wanted to get an understanding on. So one was the other income. The other income has actually improved from 132 crores to 260 crores. So just wanted to understand the breakup of this. And secondly, the employee cost has gone up from 178 crores to 262 crores. So what has caused this increase on a quarter-on-quarter basis?
Yeah, I will hand over the mic to my CFO. I think he will give that.
Yeah. This operating profit, what you are comparing, 132 crores was for the first quarter, other income, whereas in the second quarter it is 251.37 crores. So in fact, if you take the recoveries also, because there was one item of recoveries from return of account is there, so that has been made a good performance there. You are talking about which income, sir? Other income, no?
Other income. So it was 132.79 crores. Sir, my understanding was that this increase, this recovery actually goes into the NII. It does not go into other income.
No, sir. Recovery made from return of account is other income only.
So, return of account. So I don't think it was written off. It was provided.
Yeah.
Okay, so can you have a breakup, like 132 and 260?
Yeah, that I can give it to you later. Breakup is there, I will give it to you later.
Okay, sir. Okay. And sir, on the employee cost?
Share that.
Yeah. And sir, on the employee cost?
Pardon?
Sir, the employee cost has moved from 178 crores to 262 crores.
Employees cost, if you see, there are two breakups for employees cost. One is the salary cost, one is superannuation cost.
Correct.
Because that in the second quarter, the superannuation cost has gone up.
Okay, sir. So you just gave the figure. Can you repeat that figure?
Yeah, in June quarter, it was total establishment was 178. Correct, no?
Yeah. So I'm asking about the superannuation.
Correct. Superannuation in the June quarter, it was reversal of 19.39 crores.
Oh, okay. Answer in September, sir?
September,
sir, what is the figure?
Provision.
Sorry, how much, sir?
50.80.
50.80. So that explains it. Okay. Sir, now this is a huge variation that's happening quarter on quarter. So anyone who's wanting to basically build an understanding about the way the performance is going to move going forward, so how should one basically understand that how will it move?
It's all market linked, no? Superannuation benefit We too don't have any control over it. Whatever that actuary provides the number, we have to provide that number. So and it again depends on the market yield.
There are two events for superannuation actually. One is the yield for the residual maturity of the employee. Our residual maturity of employee is around 21 years. So any yield movement in that will affect the superannuation benefit. And number two is the increase in the inflation, DA. DA increase is also the part. So now inflation is increasing. So the DA component is also increasing for both retired employees and regular employees. So that will be affecting the superannuation provision.
Right, sir. Great, sir. Thank you so much. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1.
Shall we take the last question or we can even conclude?
So we have the next question from the line of Yaswant Kumar, a retail investor. Please go ahead.
Yeah, hi, Mahabaleshwar. Firstly, Kannada Project Subhashigulu for complete Karnataka Bank and employees. So, So, congratulations for the franchises, Balsinger, you and Kai. So, everyone has done a great job. So, my first question is with respect to the provisions. So, any reason why we have not made any provisions to increase the PCR?
No, PCR has increased. PCR has increased from 71.67% to 79.97%. That itself is an indicative of increased provision. Yeah. So PCR would not have increased, no?
Right. I understand that. My question is more in terms of like, since we have made good set of profit numbers. So, is there a thought that has been gone behind saying that, okay, why can't we increase the provision coverage ratio to more than 80%? Because considering the economic situation that we are in, so, is there a reason why we could not really think of increasing much better levels?
I have another 2 quarters. Let me look into that. And consistently we are increasing the provision and the PCR, if you look into the various segments and all, and if you look into the NNPA portion also, I have these portfolio which are well secured. What's the percentage? 93% security coverage is there for our NPA portfolio also. So keeping that, in spite of that, we have increased the PCR to around 80%. So most probably we should be able to sustain the PCR at around 80%. That is more than sufficient for the portfolio what we already have at present.
Okay, so that answers my question. And the second question is with respect to the transformation. So right from the beginning we have been aiming for the with respect to the advances, we targeted the 20% of large corporate exposure and 30% of mid corporate and 50% of retail advances. So I see that there is a slight increase in terms of large corporate advances. So going forward, will we be making more or otherwise going more towards increasing our large corporate exposure, or otherwise we're going to stick back to that whatever has been whatever the numbers that we have started with?
Yeah, that's a general guidance that we have. Our general thinking is that we should have retail and mid-corporate at 80%, with 50% retail and 30% mid-corporate, and around 20% corporate. As of now, I have 49.63% under retail, 29.32% under mid-corporate, and 21.04% under the corporate sector. But this is one general guidance. But most significant thing for us, how this particular portfolio is behaving and what are the yield from this respective portfolio. Even though in the corporates, these are all having the external rating, the risk is relatively low. Yield is also low compared to the other sectors. So we have to take an informed decision. What should be the composition of these things going forward, depending on the external economy, my own risk perception, as well as the yield advantages that we are going to have. So to that extent, we will be always exercising our judgment related things, and we will always aim to have a healthy and remunerative portfolios out of these three sectors from the advances.
Okay. And one last question. I have seen the presentation. I mean, they've got elaborate information very much. So I hope we continue to do presentation like this. And I was looking for this restructuring. I see that there is a restructured portfolio based on geographies. So I was looking for sectoral wise loans restructuring. So that will give us more confidence on in which particular area there is more of restructuring. So do you guys have that number?
That is the geographical restructuring area, sectoral and geographical.
I am referring to slide number 23.
Okay. Should be further. See, very interesting that slide, Mr. Yeshwan. If you look into the GBC and compare it with the NPA as well as the restructured portfolio, I think across all the regions, across all the major performing these states, there is improvement. Look at the Karnataka state, NPA to the GBC has come down from 2% to 1.53, as well as restructured portfolio has come down from 9.1 to 4.23 to 3.68. So this general trend overall also, the NPA from 4.5 to 3.36, 7.8 to 6.1 there. You want it to be further elaborated or what it is?
No. Okay. So there is look at the slide number 22. It says sectoral loan exposure. So similar to that, I was expecting that sectoral loan restructuring.
Sectoral loan restructuring. Okay. Earlier I think we have given, but still okay, we can provide that. Going forward, I will make a note to provide that.
Yeah, that would be good.
Restructuring. See, all these things, when we have a huge restructuring portfolio, it matters. But fortunately for us, even though about a year back, our restructuring was at around 7.5%, fortunately for us, it has already come to